To protect consumers, both federal and state governments control and regulate the credit industry. Most states have set a maximum on the interest rates that may be charged for certain types of credit. A law restricting the amount of interest that we can charge for credit is called a usury law. The Federal Trade Commission, or FTC, is the U.S. agency that enforces credit laws and helps consumers with credit problems and complaints. Many city and local governments also have consumer credit protection agencies. Several states have banking or consumer protection departments that deal with credit issues. The Consumer Credit Protection Act is a federal law that requires creditors to inform consumers about the costs and terms of credit. The law also provides other protections, such as if your credit card is stolen or lost and someone else uses it, your payment for any unauthorized purchases will be limited to only $50. Also, companies are not allowed to send a credit card to a consumer who does not request it. It also forces advertisements to indicate the true cost of the credit and informs borrowers about cost of credit, annual percentage rate, and credit terms. The Equal Credit Opportunity Act is a federal law stating that credit applications can be judged only on the basis of financial responsibility. That means no person can be denied credit on the basis of marital status, gender, age, ethnicity, or religion. The law allows only 3 reasons for denying credit: low income, large debts, and a poor payment record. A person who is denied credit must be given a written statement listing the reasons for their denial. Each consumer with credit has a credit report. A credit report also is considered a credit history, and it is a record of an individual's past borrowing and repayments, and it includes information about late payments and bankruptcy. You have the right to know what's in your credit report, and the Fair Credit Reporting Act is a federal law that allows you to examine and correct information in it. Only authorized people and businesses can see your credit report, and lenders rely heavily on credit reports when they consider loan applications. They're collected by credit bureaus. 3 main are Experian, Equifax, and TransUnion. The Fair Credit Billing Act is a federal law that requires creditors to correct billing mistakes that are brought to their attention. The law also requires that consumers be informed of the steps they need to take to get an error corrected. To do this, the consumer must notify the creditor through writing. The Fair Debt Collection Practices Act is a federal law that serves to regulate collection agencies. The purpose of the Fair Debt Collection Practices Act is to prevent deception, harassment, and other unfair debt collection practices by collection agents. A collection agent is a person or business that collects payments for overdue bills.
Credit card theft, the misuse of credit information, and identity theft are increasing problems. Fortunately, there are ways to deal with them. One way is to write down card issuer's phone number and contact information. A stolen credit card can lead to identity theft. Identity theft occurs when someone steals another person's financial information with the intention of committing fraud under that person's identity. People who commit identity theft often steal someone's credit cards and social security numbers. They can pose as the person to get loans or more credit cards to make purchases.
People who discover that their identity has been stolen should take the following steps. Contact their credit bureaus. The credit bureau will flag the file with a fraud alert that will prevent new accounts from being opened without permission. Contact the creditors. Creditors should be informed about fraudulent activities immediately by phone and in writing. File a police report. A copy of a police report is important, in case creditors need proof of the crime. Consumers can protect their identities by being careful with the way they handle their credit, ATM cards, checks, and social security number. People should take these precautions. Shred personal papers that contain your account numbers and social security number. Be careful when giving out your personal information. Watch your salespeople do with your credit or ATM card when you give it to them. Make sure your card is returned to you after purchases. Carry your checkbook, social security, ATM, and credit cards with you only when you expect to use them. When you make purchases online, read privacy policies and use a secure browser. Review your monthly bank and credit card statements for unauthorized purchases. Many consumers charge too many of their purchases and later realize that they cannot afford the monthly payments. To fix the problem, they have a few options to consider. The first thing a consumer should do is contact the creditor. Consumers can often work out a new payment plan to lower payments. They will still owe the original balances plus more interest since it will take longer to repay the debts. Consumers who are unable to work out their credit problems should talk to a credit counselor. A credit counselor helps people work out a plan for getting out of debt. They also assist consumers with managing their money. They can also help clean up a poor credit report, but they cannot restore good credit on a credit report. Another possible solution is a consolidation loan. A consolidation loan combines a consumer's debts into one loan with lower payments. If the interest rate on a consolidation loan is better overall, then a consolidation loan is a good idea. However, in some instances, the interest rate could be higher if the debtor has a poor credit history.
The last resort is to declare bankruptcy. Bankruptcy is a legal process in which a borrower is relieved of debts after showing an inability to pay. One kind of bankruptcy involves selling most of the debtor's assets and passing the proceeds to the creditors. Another kind is reorganizational bankruptcy. If this is chosen, the debtor, the creditor, and a court-appointed trustee develop a plan to repay the debt on an installment basis. People should avoid bankruptcy because it can make it difficult to get future credit.